This is a Team 4 presentation for CIS 530 on the subject of Washington State Community College failed PeopleSoft ERP implementation. The presentation was prepared by Deepu Kaimal, Aziza Kelly, and Andrew Tomasic. It has been split into three parts. First, we present an overview of the case, parties involved, and details of the project. Then we focus on what exactly went wrong with the implementation. And finally, we try to give some analysis on what could or should have been done in order to avoid the implementation failure. Washington State Board of Community Colleges approved a decision to implement a new ERP system in 2010, which would encompass all 34 community and technical colleges in Washington State area. All 34 colleges would implement a PeopleSoft higher education suite that would standardize software and operations across all campuses. The new system would replace a 30-year-old system based on COBOL, a computer language originally designed in 1959 as a part of U.S. Defense Department initiative. Project implementation started in 2013 and was initially scheduled to be completed by August 2014, with bugs worked out by January 2015. The goal was to first install the software and work out the bugs at the three community colleges in Tacoma, Spokane, and Spokane Falls. The software picked for the implementation was PeopleSoft Higher Education Suite, developed by the Bay Area software maker Oracle, that has been trusted by many other institutions nationwide. The customized software would be called CTC Link, and the goal was to have every college in the state use the centralized system by 2017. The Washington State Board for Community and Technical Colleges awarded an installation and implementation contract to a Denver area-based international information technology firm, Cyber Incorporated. The contract was valued at $100 million, and the tuition hike, which began in 2012, was supposed to go to pay off the project. PeopleSoft software is heavily verticalized for service-based industries. For schools, it provides education-specific features for areas such as grant management, fund accounting, student scheduling, and registration. In addition, it provides standardized IT platform for human resources, payroll, financials, or procurement, and that will replace an old legacy system. The new system implementation was intended to eliminate manual workarounds and standardize business processes across the colleges with the least amount of customization and college unique configuration as possible. Because the new system has been financed by student fees, it has had no legislative oversight. As some state congressmen mentioned, the project has kind of flown under the radar. Student tuition hike was intended to cover the implementation cost, 2% of each student's tuition in 2012, which later jumped to 3% in 2014. The tuition hike would go on to an innovation account and funnel to the CTC Link project. The total budget for the implementation was readjusted to $110 million in 2016. The implementation started getting ugly from the start of the project. Already $86 million was spent by the Washington State Board for Community and Technical Colleges by 2016, with only the three initial colleges seeing the software. It included the upfront cost paid to Cyber to get the project going. However, it was the Cyber that filed a lawsuit in April 2016 against SBTC, claiming that the company was yet to be paid for various milestones completed. It also blamed the SBCTC personal for the implementation failure, but more on that in the later slides. In addition, in November 2016, Gartner Consulting, an independent consulting firm, released a report on the project outlining Cyber's financial losses. In the first 9 months of 2016, supposedly Cyber lost $53 million in cash flow from operations, which was supposedly highly affected by the performance issues with the SBCTC ERP implementation project. Finally, a month later, company filed for bankruptcy. Soon after, a new lawsuit followed claiming that Cyber is owed $30 million by the state of Washington. After collapsing in bankruptcy, Cyber was bought out by HTC Global Services located in Troy, Michigan. Cyber's tag price was $93 million, which was a bid way above the asking price of $50 million. As a consequence, HTC Global Services eliminated almost 200 of Cyber's contracts, which included the one with the Washington State Board for Community and Technical Colleges. As a consequence, the state community college system is left in limbo by not having any Cyber or HTC employees left to finish the installation and training for the remaining 31 schools.
What went wrong? Lack of proper planning and governance, data conversion issues, and relying on consultants too much. Conversion of data, which existed in the legacy system for 30 years, to the format required by the ERP, is a big challenge, and extra caution and leadership supervision was needed. Often, it's not a one to one mapping and requires subject matter expertise of the legacy system. Using consultants who have knowledge of the product alone to convert the data was not a good idea. Hostile approach to the new system by people who got used to the old system and resisted change. Too many customization and change requests by the board. When ERP systems are customized too much, it can cause delays and failures. Business processes should be standardized according to the specifications of the product and not customizing the product to adapt to legacy business practices. Delayed start caused delay down the line. Lack of proper training given to business users. Thorough testing of the product was not completed before go live. The test cases were needed to be properly reviewed by the business users along with the technical staff and cyber consultants to ensure that there were no gaps in the business processes and all core functionality was thoroughly tested in multiple test cycles. Holding subsequent implementations when problems were discovered on the pilot implementation added to the cost. Not a carefully written contract between Washington Community Colleges Board and Cyber Inc. Lack of proper organizational setup at the community colleges. There is no evidence of having an industry standard organizational structure like a project management office to oversee large projects. The business users assigned to this project were already busy with their day to day tasks and therefore did not devote the required time for this project. Cyber's own financial situation and internal management issues have played a role in the delay of the project. Too many modules were chosen for first implementation, which should have been avoided. Too many requirements were captured incorrectly and not caught before implementation. For example, the banking services, which was a critical piece, was marked as out of scope and was not found out during requirements review, testing, or user acceptance. More time was required to implement such a large and complex project involving 34 campuses. Adapting 33 years of business processes across 34 campuses needed more time than that was estimated for in the beginning. Each college acted independently and had their own set of business processes, which was very different from the business processes at other colleges under the same board.